Hey everybody, I'm Zach.
And I'm Jesse.
You're watching the Disruptive Investing EV news stories. We got a bunch of cool ones this week, so let's get right to it.
First up, Rivian's top engineer goes back to McLaren.
So after 5 years at the post, Charles Sanderson, who's Rivian's chief engineer responsible for developing the R1T vehicle platform, has left Rivian and returned to his old stomping grounds at McLaren, where he used to be the head of software development. Now he's returning as CTO of McLaren.
Now, people come and go from the corporate world, and Sanderson's leaving could be for all sorts of reasons.
Yeah, it's not really the one data point that I'm interested in. It's looking for patterns. So when you're deciding as a disruptive investor whether to invest in a company or when it's time to get out, you have to do your work. And watching for news like this can be important if it fits a trend. Are people leaving a sinking ship, or is this just another vertical move for Sanderson?
Let us know in the comments what you think.
The reason I'm thinking this could be a trend is that 6 top executives have left Rivian in the last 7 months, including Randy Frank, who's VP of Body and Interior Engineering, Steve Goronsky, VP of Parts Purchasing, and also out the door were Rivian's chief lobbyist, general counsel, and a senior strategy director. And it just seems a little weird that in such a short amount of time, all these big people are leaving. But yeah, let us know what you guys think.
Yeah, I don't really see a trend necessarily. I mean, I think that I do think that when people leave, it can be a little bit cyclical. I mean, and I know that Rivian isn't doing well, so it's like very easy to match up these two things and be like, look, Rivian bad, scary, not so good. I just don't. I don't know. We've run into the same problem with Tesla, where it's like, oh my gosh, this guy's leaving. Oh my gosh, and then we get all sorts of worked up, and it's been fine.
In this case, I get it. He moved on to be CTO of McLaren. That sounds like a nice, sexy job and probably pays really well. But
probably comes with a McLaren.
Maybe they throw in a McLaren in a parking space. But I'm thinking that, Rivian just raised $1.3 billion just basically to keep the runway going. And I think if you're in the top levels of the company, you may know more than we know. And you might be thinking like, maybe get out now while the getting's good. I'm just saying that could spell that, or it could, again, just be random.
Next up is a similar story. Vietnamese EV company VinFast has just lost another 3 senior sales executives.
So VinFast has confirmed that Gareth Dunsmore, VinFast's deputy CE for global sales and marketing, has left the company for personal reasons, along with Greg Tebbett, VinFast CMO, and Craig Westbrook, VinFast CSO. Both left according to VinFast due to changes in the management model and specific business requirements. Basically, gobbledygook corporate speak.
Again, is this regular turnover or the beginning of a trend?
Well, these are some data points, but when added to the fact that VinFast let go of Gareth Dunsmore's deputy, Emmanuel Brett, back in June, along with 3 other senior executives.
And just this February, as we reported, VinFast consolidated its U.S. and Canada operations, cutting 80 jobs.
And lost their CFO, Rodney Haynes. Again, the reason we're following VinFast here on DI is that VinFast filed in December for an IPO on NASDAQ under the ticker symbol VFS.
And it hasn't gone public yet. The question is, will this be a SPAC?
Nope. According to VinFast filing, this will be a traditional IPO because VinFast has been around since 2017 and operational since 2019, making cars in Vietnam. They are generating revenue. So 13.5 trillion dong in 2022.
Sorry, I don't know the US dollar to Vietnamese dong currency conversion off the top of my head.
Sorry about that. That's $572 million in revenue in 2022. And VinFast has just started their first sales outside of Vietnam with a few dozen deliveries of their VF8 SUV in California in the past couple of weeks. And I think this is why a lot of people have left. I think they had thought, they'd announced that they'd be way further along this path by now. And, only having just sold a few dozen cars doesn't really do much yet.
I don't know, but to me, it sort of felt that VinFast has been moving fast. Because it was like, I'd never heard of this company like a year ago. And then it was like, they're moving to the US. And I was kind of like, yeah, right. And now they're actually delivering cars. I mean, I'm impressed.
I think they had the wind knocked out of their sails by the IRA, the Inflation Reduction Act. I think we're getting this plans in operation for a couple of years, and then IRA comes along and says you have to be here to get those incentives. They are planning to open plants, but the last we heard, it won't be till 2025 that they even begin. I think that's part of the problem, is that their competition has gotten to take advantage of a lot of these subsidies and tax incentives, and they haven't.
And of course, competition is Tesla.
Yeah.
It's not exactly who you want sitting on the other side of the field. And on to another EV startup, Arrival.
So Arrival's new CEO, Igor Torgov, announced last week that Arrival has secured $300 million in equity financing from Westwood Capital, saying this financing line provides us with access to more liquidity and will fund the business into late 2023.
Now, you may remember that we reported last November that Arrival said that they were running out of runway and may not have enough money to make it through 2023.
Arrival is now insinuating layoffs and other cost-cutting measures to get down to a targeted burn rate of $35 million per quarter by the second half of this year.
So I guess no more robo-race for them, huh?
Yeah, and what you're talking about is we went out to England and you were able to ride in a robo race car that was basically sponsored by Arrival. I think that all that kind of fun stuff, now that money is expensive, gets called off. I think they return the coffee machines, they return all the,
Not the Brazil nuts.
I think they have to return the Brazil nuts and they have to cut down their burn rate. And this is not the fun or easy part for a lot of these companies, because basically the layoffs and now you have to focus on what your profitable part of your company is. Remember, Arrival makes these small delivery vans. They
don't make them.
Well, they're starting to make them.
They want to make them.
They've made a few. They're also planning on making these buses. The problem is, I think they're going to have to decide on one or the other whichever one is more profitable, because without much money, I mean, let's be honest, when you're down to $35 million a quarter, that's not a lot of salary. That's not a lot of property.
And I think that the real problem is you have employees the ones that you don't fire, who are kind of used to a certain lifestyle.
Yeah. And also they're looking for the door.
And so it's just if you're scrappy the whole time, it's just a way different story than when you get bloated. As soon as you get bloated, I mean, I hate to drag Rivian back into this, but it's I think that they got bloated at a certain point.
Yeah.
And while money is great to have and it certainly helps move the ball forward, it just doesn't make for a very efficiently run company. Whereas Tesla has always had to squeeze through these little, eyes of needles and stuff like that in order to make it through. And that has really forged some strong people within the company.
Yeah.
Now, despite the funding announcement, Arrival's U.S. listed shares closed 13.5% lower on Monday.
Yeah, take a look at the stock chart. It kind of says the whole story. I'm really surprised that they got any funding at all. They're going to have to do a reverse stock split to stay listed on NASDAQ soon, I believe. And I wouldn't be surprised if we get word on some kind of merger, acquisition, or bankruptcy later this year. I mean, look at their market cap. Look at their stock price. This is not doing well. I'm really surprised they got the funding. $300 million is one thing if it's just we're hitting a little glitch, and I don't know. I feel like this is going to be one of those stories that we're hearing all too often of companies that just were doing well when the money was cheap and just can't cut it.
And I mean, $300 million coming in now when the market cap is so much lower means a lot more dilution for shareholders. Yeah. And they didn't really want this necessarily. I mean, they didn't want the company to go under, but you'd hope that you could get a higher market valuation before you did something like this.
Yeah, it's an easy target for Foxconn to come in and take if they've got any good assets. And this story, it feels like VW was really taking notes during Tesla's Investor Day a few weeks ago.
Yeah, Volkswagen has announced that it's looking for ways to vertically integrate, and to that end, they announced last week that they have officially selected St. Thomas, Ontario, in Canada, as the home for its first North American power company EV battery plant.
It'd be funny if employees read the press release and
they're St. Thomas?
Yeah, get your bathing suit ready. Oh, wait, it's in Canada.
Oh, darn.
And then they went a step further. VW's board member in charge of technology, Thomas Schmall, announced that the bottleneck for raw materials is mining capacity. That's why we need to invest in mines directly.
These announcements followed VW's other big announcement last week that Volkswagen will be investing almost $200 billion over the next 5 years to ramp production.
So a big part of this investment is going towards scaling battery cell production through what they're calling PowerCo. It's their brand of, EV battery factories. VW expects PowerCo to generate profit of more than $21 billion by 2030.
It's obvious why Volkswagen is coming to Canada. It's got that sweet U.S. federal IRA money if they can produce stuff there. Again, we're talking about billions of dollars in tax credits for EV consumers and tax subsidies for companies that mine, refine battery materials.
And lastly, this week, Blink Charging, the EV charging company, announced last Thursday that they have won the contract with the United States Postal Service to sell up to 41,500 EV chargers to charge the USPS's fleet of electric vehicles.
Now, you remember that when President Biden took office, he pledged to transition the federal fleet of vehicles to fully electric ones. The Postmaster General pushed back, and they only committed to electrifying 10% of the USPS fleet by awarding the contract to a defense contractor, Oshkosh Defense.
Which, by the way, had never made an EV before.
And then there were lawsuits.
And do you see what they're trying to do here, folks? They're trying to slow the transition to EVs to keep their oil lobbyist friends happy. But anyway, I guess this Blink contract for 41,000 EV chargers is good news. Blink will be selling the USPS their Series 7 dual port charger, which features 80 amps of power.
The charger allows for 2 vehicles to be plugged in simultaneously for 19.2 kilowatts of charging.
And my big question here is, I mean, so it's sharing on this one post, which is smart, but are post office locations throughout the country going to have enough power? I mean, 80 amps is a lot of extra power, and otherwise they're all going to have their main service panels upgraded. And I just wonder, like, and also I don't think one charging station is going to be enough if you're actually bringing in that many EVs, because even small post offices generally have like a bunch of trucks.
I do think that this is an interesting point. I mean, are we going to be switching to, some off-grid battery renewable solutions? Are we just going to be doing, service upgrades like you're talking about? And this is kind of small scale if we're talking about
it really
this.
is. And I think the U.S. Post Office is going to learn the hard way that level 2 charging is good. There'll be some overnight charging that'll work fine. But imagine you're out doing your route and you realize for whatever reason that, gosh, I'm down to 20%. I got to go charge up fast. Can these vehicles charge fast? I mean, Oshkosh Defense, since they've never made EVs before, I doubt they put really fast charging into these vehicles. So if they get kind of stuck, are they going to be able to go to a Tesla supercharger and charge up?
It is a good question. But yeah, I wish that this was a more exciting story. I mean, I am excited for mail trucks to be transitioned away from this, 1980s, like literally something that Mr. McFeely stepped out of in Mr. Rogers' Neighborhood. Like, why has this not advanced at all? When I have like a computer in my pocket.
Well, it really is sad when you're talking about the government and their idea of disruption is, EV technology that's old and charging technology that's old. And that's what I kind of want to point out here. I think that Blink, I'm all for EVs, I'm all for charging, but this isn't really disruptive. They're so far behind the curve that even moving into this like century seems like a big deal.
Yeah. And I mean, I think that level 2 charging will probably work. It's just really funny that we're talking about 41,000 EV chargers. And it's like Tesla sold more than 1 million vehicles last year. Right. All those people are probably going to need EV chargers. So it's like 41,000 is such a tiny little number.
And for many people who read this headline, they think that takes care of it. It does not. The fleet has to be way bigger, and the number of chargers has to be way bigger, and the number of chargers at each location has to be way bigger. So I just think this is going to be the beginning of the learning curve for them, where they realize like, oh gosh, this is harder than we thought. Anyway, thank you so much, guys, for joining us. You can come back every week for news stories on things that are disruptive. And if you have questions or comments, please put them in the comments down below. We'll see you guys next week on Disruptive Investing.